Finance is the oldest industry in the world, and we're disrupting its future. Welcome to Fearless Impact. I'm Molony Cook, COO and co-founder of Dealflow Exchange, a private capital ecosystem redefining how money moves and who gets to raise it. Let me take you on a journey of building the next unicorn while breaking into the boys' club of deal making.
We're in New York City. We're on the Fearless Impact podcast, and we're here with Adam. How are you?
I'm doing well. How are you?
I'm really good.
Yeah, well, thanks for having me.
Absolutely. Your track record is very impressive. 4 exits, $1 billion worth of transactions in M&A. I'm curious, where did this all start for you?
Yeah, it's funny. I mean, I don't think anyone really gets started in it thinking where it's going to go or what's going to happen. It really started having great mentors, right? And so I was really lucky to have some great mentors really early in my career, like right out of college. And they kind of, took me under their wing, showed me kind of the ins and outs of their business, and then just kind of, led itself into that. And I think the other thing is, from my perspective, I grew up in I guess you would call it an entrepreneurial family. My dad was owned a family-owned grocery store. Right, so not entrepreneurial in the sense that we think today, right? Fintech and those kind of things, but entrepreneurial nonetheless. And so I think I always kind of had that in me as well. Like there was something in me from a really young age that I thought I wanted to own and operate and run a business, my own business or with a team. And so what I did find early on was surprising me that not everyone is wired that way. I kind of thought it was kind of the obvious, like, as soon as you find your niche, that's what you're going to do. And I think you have to kind of be wired that way.
I agree. My dad is a professional punter on the horse races, so I'm also not a traditional entrepreneurial journey, but I felt the same. I was like, wow, I do really have this itch. And I'm curious, like with those 4 exits, what industries were they in?
All primarily capital markets, fintech. Mm-hmm. Yeah, so either kind of advisory business, advising like the C-suite and boards of publicly traded companies on capital markets issues. And then that led into how do we productize some of this, which went into more of the B2B fintech, kind of enterprise fintech spaces.
Yeah. And having, 4 is a lot of exits. So, you got a couple under your belt. What would you say, like, let's go back in time. What do you wish you knew before going into some of those transactions?
One of the things I always tell any like first-time founder, it's going to take twice as long as you think and twice as much money as you think and 3 times harder than you think it's going to be, right? It's just, it's hard. It's really hard. And I think I think there's a general understanding probably when you get into it that's going to be hard work, like quote unquote hard work. And it's not the hard work part that's hard. It's the difficulties of kind of being on your own sometimes. Right. And I know you're in the midst of it. Right. And so that the ups and downs of, you're the quote unquote CEO or COO one day. Right. And having these big, meaningful, meaty conversations and interactions and making these decisions. And then I always joke, you're kind of like the janitor the next day. Right. And just really doing them. You're in the muck and doing the things that have to get done just to run a business and keep it running. And then, just the ups and downs of thinking you're going to get a deal and the deal falls through or waiting forever. And just everything is so just up and down, right? Just so volatile. And I think that the length of time it takes to get to a certain level and the volatility is just really, really hard for people to digest.
I resonate with that.
Yeah, I'm sure.
And I think like I didn't have like a huge exit, but I had one exit. And I think doing it alone, I was like, I never want to go through this again by myself. Because it's just like, it's so lonely.
It is.
And I think people do talk about it, but to experience it and then you're also like a young female in a completely different country. It's like, it's so real. So I definitely resonate with like finding the right mentors, finding the right community. How did you kind of position yourself when you were building your board or when you were finding those mentors? Like, how did you kind of, A, find those right relationships, but also B, like, make it mutually beneficial as well?
Yeah, I think that was the hardest part, the latter, right? When I was younger and probably, dumb and and naive, right? And just thinking that it was almost, I don't know, like an honor for me to be asking them to be like,
Right.
"Would you be part of my advisory board or part of this board, or you want to invest in the company or whatever." And so learning that, and now being later in my career and seeing the other side of it,
yeah.
right? You're like, yeah, now I get it, right? Like, time is valuable, and for the these people, and so it really was just the learning curve of that, right? Learning what you are offering and what you're asking, and being very, very specific, and being very cognizant of their time and appreciative of their time.
Agreed.
And that, just letting them know that, here's the expectation, here's the ask, right? Not just, do you want to be on the advisory board or do you want to be on the board, but here's what we need and why, and here's the expectation, right? And I think then you kind of know from their perspective, you get the feeling of, okay, I know what I'm getting into. I know what's expected and what I'm committing to, and then I can kind of go from there. And so that was the biggest probably learning curve for me, was just how to make that ask, like, politely, I guess, for lack of a better term.
Yeah. And also, like, I think transparency is key,
sure.
like setting expectations. The last thing you want to do is, especially with someone you admire, you don't want to burn that bridge if you're not transparent.
For sure. Yeah. I mean, and yeah, you mentioned transparency. It's something that I've almost to a fault now, I think.
No, I think it's great.
Yeah.
I appreciate it.
Like when I'm, dealing with my teams, even whether it's the investors or a board or just, people I'm leading or part of teams I'm part of, the transparency is key. Like it's everything. And I learned that both, from making mistakes as a leader or someone in that position, but also after I kind of looked back on my career, I was able a little bit better to put myself in others' shoes, like the empathy of the transparency that's necessary. I remember being in a few situations early in my career where the higher ups, right, in quotes, were going into a meeting in the proverbial like glass conference room, and we were sitting outside of the glass conference room and just not knowing what was going on, right? And then, like, you feel like everyone was in the know except for you, kind of idea, right? And there was just this, not that you should need to be privy to every little thing and every little detail, but I think that it just shows trust, and it shows, hey, you're mature enough to understand this, and I have faith and belief in you, and, we're going to share this and be transparent. And so it works both ways.
I love that, because I think it's also the leaders being vulnerable.
Yeah, right.
Yeah, and I think that's something that, like, I'm so proud of Jesse. Like, he does an incredible job at that. Sometimes I'm like, do we want to share that?
Right.
And he's like, I'll give him time to, like, process it. And he's like, no, I want to share that. And I'm like, okay, great. But I ultimately, like, let him make those decisions of, like, whether he wants to share it. And sometimes I share things and he's probably like, you shouldn't have shared that.
Right.
But I think that our team, we've created a family and we've created a bond that, like, we know where we're going. We know where we're at.
Sure.
But I think they really appreciate it. And I think especially when you're, really early stage, they want to know what the fuck's going on.
Yeah. No, exactly. And I think, like you said, especially early stage, right? Like everyone, I shouldn't say everyone, but hopefully and typically at an early stage, they're in it for not just a job, but like the passion of where this could go.
Exactly.
Right? Those first 3, 4, 5, 10 hires, right? It's more than just a 9-to-5 job for them, right? And not that it isn't for someone else later on in the maturity of the company, but yeah, I mean, they're taking this journey with you, right? So yeah, like to shut them out of that, I think really is a disservice not only to them but to the company, right?
Agreed.
Because you're dampening that fire. So
yeah. I agree. And I like even, offshore team members for us has equity because we just believe in like, you're building this alongside us. We know this is hard and like, just showing that gratitude.
It's pretty unique.
It is. Like even our video editor. Hi, Ross. And so I'm curious on, you've obviously been through a lot in different C-suite roles, typically COO. And so I'm curious on what do you think makes a good leader to a great leader?
Yeah, I don't know if I've figured it out, but I think I mean for me it really kind of does start like with the transparency. I mean,
Yeah.
I've created this little acronym that I use. You know, it's corny, but it's TEAM
Yeah.
for leading teams, right? And so it's transparency, empowerment, accountability, and metrics.
Ooh.
And so it starts with kind of goes in order, not necessarily chronologically, but I think of importance, right? And so transparency, we've talked about it a lot here, right? Just being transparent with everything, though, you know, not just like the good and the bad news, but expectations. And one of the things that's been toughest for me as a leader, I'm an introvert by nature. That's a learned extrovert, and so it's my wife can attest to this. Like it's not my nature to share a lot of what's going on up here. Like
Yeah.
I think things through a lot. I'm a thinker, and so I kind of came up with that construct on my own because I realized like that I was a very much of a leader who was kind of like, if it's not broke, don't fix it. You know, no news is good news. Those kind of adages. And so the transparency is not just one way, like me being transparent, but it's asking you to be transparent as well, right?
Yeah.
Then the other one is, you know, the empowerment. I think I always think of a leader as it's your job to put the right people in the right place at the right time,
Yeah.
right? And then the empowerment is also give them the tools to do it, right?
Yeah.
So how do I help you do your job? That's my job as a leader. And then accountability and metrics are just kind of how we keep each other accountable and what are the metrics we use to measure that accountability. So
Metrics is interesting. Like, I definitely am going to get a little bit of mentoring on this because sometimes I just find it really hard to define the right metrics, especially when our company is very unique.
yeah.
And so I'm curious of like when you are setting those expectations and those metrics, what are some frameworks that you have has supported those decisions for you?
Frameworks just in terms of managing people or just in general for a business? Or?
No, more in the sense of like expectations and metrics. Because sometimes I feel like your expectations can be up here and it's a little unrealistic.
Right.
So it's like, especially when you're an early stage company, you don't have, oh, let me go back off last year. Because it's like, you know what I mean?
Yeah.
So how have you kind of, especially at an earlier stage company?
Yeah. I mean, I think it's a couple of things. I mean, one, it's you can back into it different ways. So if you say top down, right? So if let's say it's sales related, right, which is a big thing for any company, but especially startup, right? One way I've looked at it is if I have a goal, $1 million. I keep hitting the mic. If I have a goal, $1 million in ARR for the end of the year, let's say, how am I going to get there? It's not going to be happenstance, right? So when I start coming up with metrics, it's around what's our average sale. So then how many sales we're going to need. Pretty easy math. Even I can do that. What's going to be your win rate, right? So if you have 10 people in the pipeline, how many of those are you going to close? All right, so now I know here's my average sale. Here's the number of sales I need. Here's my win rate. So now I know how many clients or how many prospects I need to get into the pipeline. Okay, well then how many meetings do I need to make each and every day to make sure I get that many calls per week, to make sure that I get that many prospects in the pipeline, to make sure that I get my 50% close win rate or whatever it is at an average price of X to get me to this.
Yeah.
So I try to start thinking about that. Look, the very, very early stages of a startup, I mean, that's just kind of lick your finger and stick it in the air, right?
Yeah, it's like,
you say you want to get to $1 million in ARR, right? But why $1 million, right? Other than it's a nice, fun, round number.
Yeah.
So some of it is just, you're kind of playing by you're flying by the seat of your pants, right? Like it's just what happens. But I think those are the kinds of ways I start to think about it. Is how do you back into those metrics? Not metrics for the sake of metrics, but why does that ground level metric? How's that going to lead to success?
I agree, and I think that it's interesting. I think thinking about it from a bigger picture as well, as far as like partnerships, like if we're always looking for a one-to-many approach, not looking at individual sales, but like how can we help each other's ecosystems? So I love that though of like defining top of funnel, like how many eyeballs or how many clicks or whatever it is to you, right?
Right.
So yeah, it is really interesting, and I think it's a fun journey of being a COO and being like, okay, I need to make sure that everyone's going in the same direction, but there has to be this accountability, and I am like, we're easing into that because right now people are more on smaller retainers, and so once we're funded, then we have LOIs out. But there is this like song and dance of expectations, but like reality, because we are so unique as a platform.
Yeah.
But yeah, navigating that, which is always fun.
Yeah, it is. It is. Yeah, and like I say, the early stages are so hit and miss.
Yeah.
Right. I mean, the trial by fire.
Yeah.
You're still trying to figure out, not you per se, but at an early stage, you're trying to figure out market fit.
Yeah.
You're trying to figure out pricing. You're trying to figure out terms, right? All those things. So yeah, I mean, it does get, in a way, it gets easier as you scale, because now it's more apparent where the inefficiencies are, where the opportunities are to expand, all those kind of things. So.
I agree. Now I want to transition. You're kind of like from founder into investor, Cap. And we're going to do a little bit of a rapid fire questions. Okay. So I'm curious, if you have just met a fintech founder, they're raising a seed round, they're doing around 40K MRR, what are the first 3 questions you would ask that founder?
So, okay, so you're at 40,000. I mean, there's one is, well, okay. Let me caveat these. I would say it's more of like a bucket of 3 rather than 3 questions, if I could do that.
Yeah, absolutely.
So one would be around quality of revenue.
Yep.
Right? So when I say that, I mean, how many clients do you have? Is it one client paying you $40,000 a month, right?
Great question.
What does revenue growth look like? Was it 40,000 MRR 6 months ago and it's still 40,000 today? Was it 0 yesterday and it's 40,000 today, right? So what does the quality of that look like? Things like, I think discounting is fine, right? But I want to understand, as an investor, I want to understand, if you show me a model that says our average, our ARPA, average revenue per account, or ARPU, whatever you want, or per user, whatever, is going to be X, and all we need is 1,000 clients and we'll be a $10 million revenue business. But the revenue you have so far, the ARPA is maybe only half of that, which is fine. Understand that, but just understanding what I call the quality of the revenue.
Yeah.
Right. I think the second one would be kind of product market fit, and are you there yet or not? My guess is, honestly, at that point you're not. My guess is, if you're at, what is that, roughly $500,000 in ARR on a run rate. My guess is, what you did to get those first couple sales and what you did to get the last couple sales aren't the same, right? In terms of what your value proposition, what your sales process look like. But I would want to know what that looks like. And that would give me an idea then of how mature is the product itself. Is it still kind of figuring it out and whatever? The last piece, I think, just revolves around cash. So I'd want to know how much you've raised in total to date, whether that's your own money you've put in or outside capital, what that mix looks like. What's cash on hand today? What is burn? And what are you going to do with the use of funds? And when I say use of funds, I don't really care as much, and I don't think a lot of investors care as much, even though you see it a lot on pitch decks. I don't need a pie chart that says, 50% is going to go to, go to market and 50% is going to go to development or whatever. More so, if you get the $1 million today, where does that get you? 6 months, 1 month, 1 year, 18 months from now, 2 years from now. And then what are the needs you're going to have in the future? So it's around those things. It's around the quality of the sales, the product and where it's at from the maturity standpoint, assuming it's a product-led company, I guess. And then the cash.
Yep.
Yeah.
Love that. And in your investing career, what is some attributes that you really look for in the founding team when you're speaking to, an entrepreneur?
Yeah, I mean, you only limited me to three questions.
Oh, no, this is a separate question.
I know.
Yeah.
Because the team one would be a huge one. I guess I was assuming I kind of knew that.
No.
Point,
Yeah, that was just initial questions.
No, I understand. I think that when you're looking at the team, it's really around maybe I'll focus on the negatives, right?
Yeah, please.
If they don't know their story, what I mean by that is their numbers, their market, where the future growth might come from. One of the biggest things I always find is kind of a red flag is I'm having a conversation, and I mention something because my mind is always kind of spinning, right? I'm an idea kind of guy. You know, I mean, you get it. You're an entrepreneur. Kind of always just thinking of these what ifs, right? And that's a great idea. What if we did this? And if I am hearing them for the first time, and I say, "Did you think of what about this?" And they say, "Wow, that's a great idea. Yeah, we could do that." To me, that's a red flag of not being fully cemented in owning your own story. I think a different way to say it would be, because what I would expect, if I'm hearing this for the first time, and that was my thought, and you hadn't thought of that, I don't think I'm that amazing, that I thought of something off the cuff, that if this is your baby, this is your dream, and you're thinking about it. So I'd rather have an answer that's like, we've thought of that, and here's why we're not doing it. Or we've thought of that, and it's maybe something we'll do in the future, but today we're not focused on it.
Yeah.
Great, right? So I think it's just kind of owning your story
I love that.
Is certainly a big one.
That second sentence made so much sense to me because commonly investors to us will be like, so why are you not a crowdfunding platform? Or why are you not like, and Jesse will explain, and this is always mostly Jesse, but like he has a really like, we're very firm on like why we're not going down that avenue right now. And I agree with you. If you don't understand the reason why, or you don't understand your market, it's like, well, what are we doing?
Yeah, so I mean, honestly, I think it's really kind of when you're talking about people, it's as much a gut feeling as anything.
It really is, yeah.
Yeah, so early stage, unless you're talking to someone who has, which they would never come to me in the first place, but if you have someone who has like this amazing track record that had, like they've not that you don't have an amazing track record.
I was gonna say
amazing track record of $1 billion exits.
No, I get what you're saying.
Right, where it's just kind of like, wow, like you already know what you're doing. I don't, doesn't need to pass the smell test, so to speak, right? Like if it's something, it really is just coming down to people, and getting comfortable with the people. So I think that's from a business perspective, that would be one of the easiest ways for me to kind of understand, how well do they understand their market.
I get that. You've been involved in $1 billion of M&A transaction, which is just mind blowing. But curious, what are the most like challenging parts of an M&A transaction? Like, where do you find that obviously due diligence is very hard, but like, what are some sticky things that I think that people should be aware of when they're navigating through a merger or an acquisition?
I think, look, the toughest part about anything on the integrations or the M&A side is integration.
Yeah.
It is broadly overlooked. A lot of times, it's kind of a secondary thought. Like, transaction's done. Now what do we do? Almost.
Yeah.
And even some big transactions I've been involved with have kind of been that way. So integration is really key. It should be a very, very early part of the conversation.
And what does that plan look like when you are talking about these larger transactions? When there's a whole, they've got really set in stone foundations. How do you navigate that integration kind of like plan per se?
Yeah, it coming back to the transparency aspect of it. It can't, one of the things where I've seen these fall, sideways is the again, I'll use the term like the adults in the room, right? So the deal makers, the seller, and the principal buyer will kind of get together and say some things. Oh, we'll do that. We'll do this. Here's how we'll integrate it. Here's what here's where the synergies are, or whatever. It's not trickled down. That message isn't trickled down. So this is a crude analogy, but it's almost like an analogy of like the Brady Bunch, coming together.
Very much is.
Yeah. And then just telling the kids, like, you've got to share a room with your new brother.
Yeah.
Right? Like, it's very much like that. Like, the parents got together and they decided how they were going to split up the house and who's going to live where, but they didn't talk to anyone else about it.
Yeah.
And not that necessarily having the conversation has to stop the transaction, but getting ahead of it is really key. I think along with that too, most often a lot of transactions I've been involved with anyway, not all of them, but they've been founder led. And there's just a different beast with that because, well, you know this, but like it is their baby, right?
Literally.
And so even just the somewhat seemingly minor things like the naming, right?
Yeah.
The brand, it's no longer going to be there, right? And I mean, I've seen very long, protracted discussions, I'll say, around things like email addresses, right? Oh, we still want to have our at blah 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 email. Like, even if it's forwarded to it, that's not the issue, right? So it's just it's a lot of those things where people just have a hard time letting go when they have an identity in something, and so
that makes sense.
Yeah, I think the integration piece, all of that's wrapped up in the integration, is just so difficult. And when you get it right, not to sound cliche, but I mean it's that's the magic of M&A. The numbers of it. No offense to any of my corporate development or banker friends, but I mean the numbers of it. It's hard. It's a lot of work.
Of course.
But and it's a lot of fits and starts in that process. Whether it's a 2-month or a 9-month period, whatever it is. There's a lot of fits and starts with it, but it is once transaction's over, you're kind of you're done as the banker or the corporate development person, right? And that's just when it gets started from everyone else's perspective.
So interesting.
Yeah.
Do you think you'll, like, in your, next chapter of your career, you'll want to be involved in more M&A?
Yeah, for sure. Yeah, I think it's a kind of a natural progression, rightly or wrongly, of how business works. I think that depending on the size of the company that you're with and the maturity of the market and things like that, but a lot of times you kind of look at the build versus buy, thing, right? And it's just kind of, if you are the acquirer, if you're the bigger player, let's say, in a space, it just makes it so much more efficient, so much quicker to buy a technology or buy your way into a new vertical, and then try to integrate that, than it is to play. Look, a lot of it's just the pure state of affairs of if you have investors, right? There's a certain time frame.
Yep.
Right. So once you get to a certain size, you don't have the advantage of being able to say, okay, we're going to build this next vertical from scratch.
Yeah.
Almost like a startup within inside the startup, and hopefully in 10 years it's going to be a big business, right? I mean, you get to a certain size and scale where like you don't have that luxury any longer. And so unless you are a massive company that can pour billions of dollars in R&D and marketing right away. So that's why M&A just, I think, works.
Yeah. I really am fascinated by M&A. I just think it's so interesting.
Yeah.
And I think that if it's done right and it's like executed, like obviously everything is hard during the process, but you come out of it, and if the integration does work, like you're stronger.
Sure.
As a team.
Right.
But yeah, it's really fascinating, the human to human journey of going through that process.
Yeah,
it's like a divorce and getting remarried, like, in a sense.
For sure. It is. And it is the kind of proverbial 1 + 1 = 3 kind of idea when done well, when done right. When not, it can be kind of like 1 + 1 = 0.75. So
how many out of that 1 billion, like what kind of percentage would you say was done right, and like what percentage do you think was like, oh, that was a little dicey?
Oh gosh.
If you know, like, a number, or like
yeah. Well, I would say probably 70%, probably a typical bell curve, honestly. Like, so, the bottom, 15% or so is kind of like, if I had to do that over again, wouldn't have done it, or would have done it, would have structured it completely differently. A lot of that has to do with when you're buying really small companies.
Yeah.
$1 million or so in revenue, founder-led, 4 people on the team. Those have, and let's say it's an advisory type business, right? Not necessarily a product type business. then you're really all you're buying is a book of business and people, right? And those people, if they take the money and run, which is very common, you're kind of screwed, right? So now what do you have, right? And so there's learnings around that. But anyway, so getting, there's the bottom side of the curve. There's the majority of them are good, not great. And then you have the end of the curve, which are just the phenomenal ones that are transformative.
Yeah.
Yeah.
Well, that's kind of good though in your percentage. Like, and are you losing sleep at this 15% of, like, you know what I mean? Like, like, what was your role in most of these transactions?
Yeah, it depends. More often than not, I was the integrator.
Oh, really?
Yeah. I would be at the table having the negotiations and pricing and all those kind of things, due diligence, all that kind of fun stuff. But more often than not, it's been the integration piece. So it's only me to blame if they don't work, kind of thing. My team, I should say, right? Like if it doesn't work, then it's like, what did we do wrong? Yeah. And what I would like to say, like, I think as you get older, I always joke like I've earned the gray hair, right? Like it's you learn by mistakes. And so,
unfortunately, yeah.
Yeah, and so I've made a lot of mistakes early in my career, and hopefully I make less and less as I get older.
What would you say was like a couple of like big mistakes where you're like, oh yeah, that's something that I have not done again, or maybe you did but learned the hard way?
Yeah, I think it's all around people, integration, culture.
Yep.
Those kind of things.
Yep.
I can't think of any instance where we bought something, where there's a transaction where we bought something that was a really poor product.
Yeah.
Right?
Well,
like where you bought a lemon, right? It's more around poor planning on the integration piece, poor execution on the execution. Just not good post-transaction guidelines and rails of terms like what does go-to-market look like now that you have this team and this team? What is the product? What does the product look like as you go from this? How do we integrate that product? How do we upsell and cross-sell with our customers and their customers? Who owns that relationship, right? If we have a relationship with company X and you have a relationship with company X, who owns that relationship going forward, and how and why? And those kind of things are the things that can really...
It's like in the finer details.
It is all the finer details.
Yeah, that makes sense. What makes you instantly pass on an investment?
Yeah, I think kind of going back to some of the things we talked about, when I was saying the negatives of looking at a team, it would be that. It would be, do I get the sense that you maybe don't have a strong hold on who or what you are as a company and who you're selling to and the vision? That would certainly be one of it. Another big one for me is just lack of domain expertise. Yeah. Right? I could think it sounds like the best thing in the world.
Yeah.
But if I don't understand what you're doing, if I can't repeat it, right, after a meeting or two and understand it and repeat it, and then it's just kind of an automatic pass.
Yeah, that makes complete sense.
Yeah. So those are some of the key ones.
And I'm curious, like you invested into remind me, was it a capital raising platform?
Yes.
Talk to me a little bit about, that journey.
Sure. I won't mention the name just because it's still private and whatever. Yeah. It was something where it was still very, very nascent in terms of what they were trying to do and what they're trying to build. And it was one of these things where not too dissimilar to what TFX is trying to do. But their way of doing it was much more of not bringing buyers and sellers together, but more so of just a tool to help kind of
That's right.
grease the wheels.
Yeah.
Right. And my hope and expectation when initially getting involved in it was more the former than the latter, right? More of a true exchange, more of a true bringing buyers and sellers together, the transparency, the speed, whatever it is.
That was your hope for the trajectory. And was that was that envisioned?
Yeah.
Okay.
Right. The product just wasn't there and wasn't, the most disappointing part of it was that it was probably never going to get there anytime soon. Yeah.
Why do you think that is? You don't have to mention if you don't feel comfortable.
Yeah. No, I think it's just lack of focus lack of preference on where you want to go first. And I think it's also kind of what the first beta, product was built as, and kind of really just doubling down and tripling down on that and focused on that. And I just don't think it was something that the market there wasn't a big appetite for it from the market's perspective. And so it was just going to be really tough to scale that.
Yep, that makes sense. And so I'm curious, like you've had a really diverse, like an angel investor, large M&A transactions. So as a platform, we're on the lower to middle market, we're industry agnostic. I'm curious, like in your deal making journey, what kind of features were you like, my life would have been 10 times easier if this tool was in my toolbox during my deal making process?
Yeah, I mean, I can talk about that from a number of different aspects, right? As an investor,
right?
As someone doing M&A, and also as an entrepreneur, right, looking for capital.
Yeah.
I think it's really interesting that in this day and age, right, that the speed of picking up your phone and being able to look up anything almost, right, and being able to connect with people on LinkedIn or other social networks, and how fast you can do that, how quickly you can find people and like-minded people and groups and whatever. The capital markets, especially the private capital markets, and especially as you get in the lower to middle end of that, is really, really difficult to navigate.
Yeah.
Even for, I'm an LP in a fund, and I talk to them sometimes, and it's not that they necessarily struggle to find deal flow. I think there's plenty of deal flow, but it's the right deal flow at the right time, right? And so that's the lack of speed, lack of transparency.
Yeah.
Has been something that's been both surprising and also daunting, right? From I think everyone's perspective. As someone who is seeking capital, how do I find the right capital? Who should I talk to? Why? What's the story there? And then not only identifying who they are, but actually getting in touch with them in a meaningful way.
Yeah, cut through the noise.
Yeah. So I think that lack of transparency and lack of speed, it takes an immense amount of time to find, vet, connect with, and then finally, pitch, negotiate, all those things, a deal. And so the more you can get rid of all that noise and that layer and those barriers, then yeah, that would make such a difference.
And from an M&A side?
I think the M&A side, there's a couple things. I mean, there are a lot of things like digital, like the
like the data rooms.
Data rooms,
yeah.
Thank you. The data rooms and tools around, those kind of things.
Right.
I think it really comes down to, again, how do you match buyers and sellers?
Yeah.
And so, not that there has to be necessarily a piece of software that negates the sell side, right? The brokers or the bankers, the lawyers. I think they could still use a platform to their advantage, right? Yep. And I think that makes a lot of sense. But right now, it seems like they have historically been and still are the gatekeepers.
Yeah.
Right? And so M&A, for instance, if I'm a large strategic, and I'm looking to buy a certain asset or type of asset, it's typically going to be brought to me by either a banker or a broker, or I'm going to have to initiate that conversation and see if there's interest, right?
Correct.
Right, and I think if there was a way that had some level of anonymity, right, but also transparency, if that makes sense,
yeah.
the perfect world, anonymity and transparency is oxymoron, but transparency behind maybe what the deal is like, what it looks like, things like that, but anonymity of if you're a potential seller.
Yeah.
That doesn't want everyone to know. You don't want everyone to know that you're out there selling.
And that's important.
Yeah. That would be an amazing tool.
And that's what I'm really excited about with DFX. Like when I met Jesse, I was doing my own independent search fund. And so I went through that process myself, and I was like, oh, not going through a startup. This is going to be so much easier. I was like, By the end of the year, I was like, I'm exhausted. I've spent a lot of money. The deal ended up falling through, but it was a really great process for me. And I realized that like, obviously we have the Axials, we have all of these different platforms, but I feel like for us, it isn't about removing the brokers, but it's helping making the brokers more efficient. And also for the founders that don't want to leverage brokers, making sure that you have the right education.
Sure.
Because if you're working direct with a founder, sometimes you realize, oh, I wish I had Bob the broker, because I'm having to deal with Sally's, like, everything that she's going through. It's an emotional roller coaster.
Yeah.
So I think it's really interesting looking at it from both sides.
Yeah. I mean, if I could ask you a question, I mean,
absolutely.
Yeah. Turn the tables.
Let's do it.
Yeah. As you guys are talking either amongst yourselves, right, from a product perspective, or you're talking to the marketplace, I mean, based on what I said, I'm curious, like, what you're kind of seeing, or what are the pain points that you're solving?
Yeah. From which side?
I think I would think of it from like the buyer and seller side.
From like buying and selling businesses?
Yeah.
Yeah. So I think for us, like for brokers, what we're doing is we're still giving them that place to be able to have access to new buyers, obviously, but a centralized place where it's a lot easier to use. It's a lot more efficient, because if I'm someone that's getting involved with an M&A transaction, I can actually raise the capital, get multiple term sheets from debt, right? I can meet with equity, family offices, etc. But I think for us, what we're trying to do is make that process of top of funnel introductions a lot more meaningful, because it's not the entrepreneur, the CEO reaching out to all of these people. It's actually the other way around. It has to be from the buy side, from the investor actually engaging in that opportunity, because there's something that makes sense from the high level overview, whether that's a pitch video, whether it's the data points, whether it's just fitting my investment thesis as a whole right now. So that's where we feel like we're really being able to support the ecosystem to make it more efficient in that process. But then looking into the future of 2.0, it's also about removing bad actors, right? Yeah. It's about transparency. From the sense for us, it's like we are speaking to a lot of different types of investors, and we've said no to a couple because I'm like, you're just not you can't open doors the way we need you to.
Right.
And so sometimes being able to have to do that due diligence on people, it's really hard to sometimes find out, like, were you actually involved in that transaction, or are you just telling me that?
Yeah.
Like, it is hard. Like, yeah, you have PitchBook, you have Crunchbase, but there's a lot of deals that are happening that are not recorded.
Sure. Absolutely.
So what we're doing in our 2.0 version, we're basing capital around communities, which I think is really important, because it's all about your relationships, your reputation in the industry, so on and so forth. But then the other part of it is having that actual technology to be like, okay, my deal team, or the buy or sell side, can verify that transaction. That goes onto the blockchain. And so you can then, I'm having a conversation, I want to learn more about you as potentially being an investor in DFX. You can actually open up a high level overview of those transactions, knowing that another member actually verified that.
Sure.
So I think for us, I'm really just excited to see how this evolves. I think that, from a year from now, it's going to be a completely different ecosystem. But I feel like we're really moving in the right direction. And then I don't think but we're actually building an upper echelon community.
Okay.
That's just for high net worth individuals, family offices, and large fund managers. And that's really come from a need of, like, European family offices. They want more access into the US and to co-invest with each other. So, there's a lot of different things, moving and shaking, both from being able to support, lower to middle market, but then able to actually support that upper echelon community as well.
No, it's amazing. Every time I talk to you guys, I feel like we're doing something new and exciting. And I mean, you mentioned, the two things that I said, in your own words, but what I heard, like speed and transparency.
Yeah.
Right. I think that efficiency, the speed, whatever you want to call it, I think it's
time kills all deals.
Time kills all deals. My wife is tired of me saying that, because I say it all the time. But it's true. I mean, in my experience, it is absolutely true.
Yeah.
Something happens, something comes up, someone moves on, whatever it is, new buyer or seller comes in. It's just people get cold feet, right? Like second thoughts, whatever. So yeah, the faster, and you know, it doesn't mean that deal should not have happened in most cases, in my experience, right? It's not to the benefit of time kills all deals.
Yeah.
Right. It's to the detriment that it's just that it's even just exhaustion, like just malaise of just like, I'm done with this, right? We've been doing this for 6 months and gotten nowhere, right? So the more that you can speed up that process and bring people together and have transparency, I think it's amazing.
And I'm curious, last question. This is for the Founder Institute side of things, but we have to ask.
Sure.
From 1 to 10, how likely would you recommend DFX to a founder or investor?
As a platform to use or as an investment?
As a platform to use.
Oh, I mean, full transparency, like I've not used it.
Yeah.
Right. So I won't.
But you know enough.
But I know enough. Yeah.
Yeah.
Look, I think it would be like it's a 9 or a 10. I mean, to put it.
Oh.
But yeah, no. I mean,
is he telling the truth?
I think that a couple reasons. One, you and Jesse and the team. I mean, I've only really met you and Jesse, I guess, but you and Jesse as a team just are amazing people that are good, solid people that people are going to want to deal with and trust, right? So I think that's immensely important. Two, what you're doing is so unique. The community aspect of it, the idea of bringing buyers and sellers together in this ecosystem, this fully kind of coherent, connected ecosystem is really unique. And I think that the benefit that they get from being involved now in the kind of exponential growth they'll see in the future, I think is something that you won't see going through a more kind of traditional route.
Yeah.
So
no, I really appreciate that. And like Jesse and I really appreciate you. And it was like really cool transparency. You ended up turning up to our Boston event. We didn't actually invite you, I don't think. I think you found it on Luma.
No, it was through LinkedIn.
Oh, through LinkedIn.
Yeah.
Oh, perfect.
Yeah.
And so we were just like so impressed by Adam. We're like, we need to chat with this guy because you're just a wealth of knowledge. So I really appreciate your time and just being able to support our ecosystem. And also I'm excited to kind of watch your next chapter as well.
Yeah. Well, thank you for having me. It's great being on.
Yeah. Uh-huh.